Before we begin, a disclaimer: this podcast is for informational and entertainment purposes only and should not be relied upon as the basis for any investment decision. Nothing you hear is an offer or solicitation to buy or sell any security. The securities discussed on this podcast may be owned by persons being interviewed. Before making any investment decision, please consult an investment advisor.
Yes. So, okay, David, we are starting this podcast. Why do you need 1 million podcasts in the world? What are you doing here?
Yeah, why don't you why don't you tell me, since I think you were the one who initiated
Right, yeah.
What were you thinking?
Whoever is going to listen to it later, I think I've been talking to David it's my third year where I'm trying to nudge David to start a podcast with me. So we finally got there. But I guess even before we get to talk about why this podcast, I think we should talk about the naming. Why never sell? Are we trying to top take the market? Is that what we're trying to do?
Yeah, I think never sell. I think when you throw that phrase out there on Twitter, it tends to provoke a lot of controversy. And yeah. I think we're being a little bit tongue-in-cheek there in using that as the title. Obviously, there's always a price where even a great company can make for a terrible investment. But I think what are we trying to convey there? I think it's just that if you really have found one of these great generational companies, rarely does the market sort of have that priced in at any given time.
Right.
And so I think this doesn't necessarily mean, go out and buy Costco at 50 times earnings or Palantir at 50 times revenue. But I think, at least for me, somebody who is a taxable investor, and also I think who has historically tended to be maybe a little too cute about valuation, to maybe tilt my bias towards letting these
winners run,
sitting on my hands a little bit and letting these winners run. And so that's kind of how I'm looking at things. But I don't know, what about you?
I think it's mostly a joke, right? Kind of like an inside joke that people on Fintuit have. And it's also probably a bull market thing. During bull market, you just look back and say, oh my God, I sold this stock at that price.
Yeah.
It's trading at 2x, 3x of that, right? And then the bear market happens and people realize, never sell. Those are the days of the bull market, right?
Right. So if we were launching this podcast at the end of 2022, who knows what it would be?
Yeah. I think we wouldn't have the guts to name a podcast, Never Sell, in December 2022, even as a joke, So, yeah. And also, I think in some sense, it's kind of aspirational as well, I would say, the idea of never sell. There's this one of these quotes that I kind of came across. It's actually a tweet by this account named masterinvest.com. And he tweeted it out something like, if you invested 4% of your portfolio in Amazon at the IPO and the balance in the S&P 500, by 2021, Amazon would represent 90% of your portfolio. No active manager is going to accept the risk associated with having such a large exposure to Amazon, right? The point is that's why I said it's almost aspirational. Obviously, probably no stock that I own right now, or almost anybody who is listening to right now, on Amazon, right, in 1997, right? But at the same time, what if you do? Then ideally, you probably just let it run, and you don't get bothered by the fact that it's kind of consuming literally entire part of your portfolio. And obviously, that's if you just keep looking at your portfolio on a day-to-day basis, it becomes uncomfortable. Oh my God, this one stock that's becoming 50, 60, 70, 80% of my portfolio. That's obviously you're not founder of it. Then founders obviously take risks like that. Third person looking from a distance, just observing a company and watching that company becoming your entire net worth, right? That's uncomfortable for almost any rational person, right? So in some sense, you need a bit of a naivety to allow such a level of concentration to dominate your portfolio over 20-30 year period, even if you have Amazon. And I think it's fair to say 99.99% in cases you don't have Amazon in your
Right.
portfolio, right?
Right.
Like Amazon
Exactly.
in 1997, that's what I mean. So in my mind, when I think about never sell, like it in some sense it's an aspiration, it's like an asymptote that I'm never going to reach, right?
Yeah.
But like, obviously, like, 40, 50 years down the line, if I look at like, oh, this stock became like, let's say 100x or 500x or whatever, and I actually used to own this company at some point in my life, and I didn't get to hold it, right? So I expect that to happen, like, so yeah, I know it's kind of an aspiration, but I know I'm not going to be able to kind of follow through it, even if I know
Right.
that maybe we should let our winners run, because it's very hard, very, very hard
Yeah.
to
Yeah. No,
do so.
I think I agree with that sentiment. Usually when you hear stories like that, it's like, a manager at Walmart who just kind of plowed his paycheck into Walmart shares in the
Yeah.
80s and then never
Yeah.
looked at it. And then, well, it's, yeah. And I guess just to circle back to this point about why did I agree to do the podcast?
Yeah.
Well, I guess something that I try to do in my write-ups, and it's also something that I've certainly noticed in yours, is that I try to take an exploratory approach to these companies. I try to look at them as case studies rather than as stock pitches.
Yeah.
Because when we're researching these companies, the whole point of the research is we don't know whether or not these are worth investing in,
Yeah. I
or
wish we
these are
knew.
good companies. Yeah, we don't know that at the beginning.
Yeah.
And so the whole point of the research is to sort of arrive at a view one way or the other.
Yeah.
I guess, when I listen to a lot of business and investing podcasts out there, even the ones that do a good job of breaking down businesses,
Sure.
it's always couched in the language of a stock pitch. And it's
Right.
always designed to convince the audience why this company that we're talking about is an amazing business and
Yeah.
if not an amazing investment. And so
Yeah.
that's something I think both of us want to try to avoid.
Yeah.
I think the way we're trying to approach this is as more of a casual conversation between two
Right.
friends who are just kicking the
Yeah.
tires on the companies and trying to figure out the drivers and how they maintain their competitive advantages and the risks and just trying to be about as transparent and honest about those aspects of a company as we can be.
Yeah, I mean, it's like, let's say I'm looking at a company and I want to talk about a company with a friend or with a fellow investor or analyst that I enjoy talking to, and just getting on a call and talking with them, and we are, for a change, we're just recording it, right? That's probably how I think of it. And also I think, a lot of people might say you're not pitching a stock, or you are not really telling me, like, what's the upside, downside, and stuff like that. Then isn't that kind of wasting my time, right? Why am I
Yeah.
listening to it, or am I even reading stuff like that? And I think, I mean, reasonable people can or may disagree, but I feel like wasting time is a core part of my investment research process. Like, I feel like if I am not wasting time researching companies, or like in some level I feel like I'm not doing my job. How exactly am, like you were saying, like, how exactly am I supposed to know that the company I'm supposed to study is a good stock even before I study it? I feel like there's a dichotomy there. Like, if you knew, then, already, then aren't you already biased going in? If you
Yeah.
knew that, okay, right? So if you're like, just screening it and like, oh, this stock looks really well in screen, like, let's spend time on it. Like, you already kind of have decided this looks really good, and, you already are probably somewhat biased, instead of like, probably just going in with a more like a fresh mind and see, like, what this business is about. Most businesses have like right price and like right valuation, and like, whether they have like, certain advantages or not, like whether they can be durable and stuff like that. So I feel like at least I feel most businesses, like, almost, I would say not all businesses, like I would say many businesses deserve time to be studied, instead of saying, oh, this looks cheap because this stock is trading at this multiple, or this looks incredibly expensive because this stock is trading at 50, 60 times multiple, stuff like that, right? So if that were the case, then, you could just do quant investing. You don't have to, like, do all this fundamental analysis. But also, like, about the point of, like, being like starting this podcast is, I think you are definitely one of the OGs in this kind of solo investment research business that, probably tens, or even like, almost like, probably more than 100 people at this point are are doing, like, through Substack or through, like, independent websites. And yeah, like, yeah, David was definitely a very, very core inspiration for me to start MBI deep dives. And over time, and he has become a good friend. So I consider myself very fortunate to do a podcast with him together. We read each other's stuff, and I always wanted to just, chat with him on stocks on a more like regular basis. So I thought, why not just record a podcast together? And as we chat about a particular company. So in some sense, this is like an extension of what we do at scuttleblurb and like MBI deep dives. So it might be easier for, I guess, to follow along if for people if they read our stuff. But also, like, in any case, I think we'll try to provide some context to help people follow along when we discuss a particular stuff, like we are going to do on AppFolio today.
Yeah, that's right. So I think that's a good segue
Yeah.
into the topic today.
Yeah.
So we're going to be covering AppFolio. So MBI has written a few good pieces on AppFolio and property management software, and I intend to as well. So my write-up will probably come out in a few weeks. So we both have looked pretty closely at the company and have some thoughts on it, and
Yeah.
and so thought this would be a good one to open with.
For sure, yeah. So, AppFolio, it's a property management software company. It's basically, I would say, let's go back a little bit, like, a typical, like, kind of life cycle of a renter. I came to the US in 2017, so I have been renting places in multiple states. So I lived in New York, then in Wisconsin, now in California. So I rented, like, places in 3 different states over the course of, like, last 6-7 years. And I also lived like a year in Ottawa, so different country. So I also rented a place there. Yeah, like, renting process, I would say typical life cycle of renter, I have like 4 distinct stages. So when you're a prospect, like when you're looking for a home, then you're an applicant when you're actually applying for a particular place. Then obviously you stay in that place for however long you want. And then finally, you may be moving out, you may be going to a different state like I did, stuff like that. So there's like 4 different stages, and each of the stages basically require separate workflows for the property manager who is managing the property. Obviously, if you're like right now, I'm staying at a place where, like, it's owned by an individual. I think he probably owns 2 units, and that's it. So AppFolio would be overkill for someone like him, right? Or any sort of, like, property management software would be an overkill for him, not just AppFolio. He can just do Excel, the good old Excel, right? So that's what basically people used to do for a long period of time before this kind of property management software companies came into the scene. And they came into the scene to actually largely serve this, like, property managers or like property owners. So yeah, so like AppFolio was not one of the early ones. The early ones was like ERD, which was like in 1980s. So these property management software companies have been around for a while, but there has been also been some, like, new entrants like AppFolio. There's one called Entrata, and there's like a Real Page, but they're also not quite new. Like, it's not like none of these have been founded, like, all of them have been founded before 2010. Right, so none of them have been founded, like, in the last 5 years or even 10 years. So yeah, like, so it looks like the industry is kind of moving to a more like consolidated, maturing phase. So why don't you just talk probably more about, just to give people a bit more context about the product, like what exactly AppFolio does for the property managers or even renters.
Yeah, right. So I think when AppFolio got started, they weren't thinking about property management specifically. They were thinking about serving SMBs in general and selling software into that base. But I think that property management was a good place to start for a few reasons. One, because like rental incomes are very sticky. And reliable and recurring, and therefore the subscription and the payment processing fees that AppFolio generates from those properties is also very reliable and sticky. But also because, property management, there are many different constituents with many different needs. So there's a big opportunity to keep cross-selling products. So you've got the owner, which is often an investment manager, and they need to waterfall cash flows to GPs and LPs. They need to track KPIs across all the properties they own. The property manager, which is often distinct from the owner, they need to keep track of who's moving in, who's moving out, who's paid rent, who owes rent, and then you have the tenants, right? And they need to be able to access the applications. They need to be able to pay their rent. If they have, if their heating isn't working, they need to put in a maintenance request. And so it serves all those constituents, and there are different products that are sold into each of those. If you want to use the Salesforce vernacular, it's like, a system of record, right? Which is,
Right.
it's software that keeps track of like tenant information and rents and that kind of stuff. It's a system of engagement, right? It's how tenants interact on the portal, and they submit maintenance requests, and they ask, and then they pay the rent. And it's a system of intelligence, which is, using data across the customer base to optimize yields, for example, rental yields. So that's kind of one way to I guess think about it.
I think I'm glad that you mentioned about it's not they weren't even thinking about property management specifically. The name AppFolio, basically, the intention to name the company AppFolio was basically just build a bunch of software catering to the SMBs. So it's like, they started with, okay, the SMBs are underserved, right? And let's try to figure out what are the softwares that we can build to serve that need, right? Mm-hmm. And over time, they kind of realized actually property management software is a pretty good business. So they just kept doubling down on property management software. So they actually did have, other solutions, other software stuff, catering to SMBs. For example, they had like some legal solutions as well.
That's right. My Case or something.
My Case, they divested it away once they realized actually the name is kind of a misnomer at this point. They just need to double it down on like the property management software. So that's why, even in my deep dive back in February 2024. Like this title is basically moving up market, right? So even though the company was started to cater primarily to SMBs, now the bet is kind of not serving the SMBs. It's basically the bet is on like AppFolio will do a pretty good job compared to the incumbents in serving the upmarket customers as well. So at this point, for all intents and purposes, I think the name itself has become a bit of a misnomer. Part of the kind of story and the lore, but it's just not you don't if you know the history behind the name, it's not necessarily where the company is going. The name will be increasingly feel divorced from where the company is going to be in 3, 5, 10 years from now. And also in terms of I think the product, so they do have 3 different tiers, right? So they have a tier called Core, which is basically more SMB focused. Like if you have let's say 50, 100 units that you are managing as a property manager, probably that's what you are signing up for, Core. Then you have Plus, which is basically if you have 300 or more, that's what would be a good tier for you within AppFolio. And then they have this Max tier, which is basically if you have, I think something they have minimum
10,000. I think it's meant for really large managers, right?
Yeah, actually,
I don't know if it's 10,000 exactly.
No, not 10,000. It's actually 1,500. If you do the math, for example, their minimum amount. So just to give you more context, so Core basically costs. So the Core basically costs $1.49 per unit per month. And the Plus costs $3.2 per unit per month. And Max basically costs $5 per unit per month. And the reason I'm saying that, they don't necessarily mention that 1,500 units is the minimum to be eligible for Max. But it basically says that the minimum spend is $7,500 per month, which basically if you just divide it by 5, that's what it comes down to, right? So that's why I said if you have 1,500 units or more, maybe that's when you should think about moving to Max tier instead of the Core or the Plus. So that's how kind of I would describe
lowest tier, the $1.49 per unit. Is it $1.49 per unit per month? So that's kind of what they came to the market with, and it was really to cater to these smaller managers who were kind of using QuickBooks and Excel. There wasn't really a good solution for that end of the market at the time. That product came out in 2006, and they were able to really clean up there. And then over time, they started to expand their ambitions and move up market, as tends to happen in CS. And so
Yeah.
so then I think their first overtures there were in 2018 with the Plus product. I think that came out in 2018, right? And then
Yeah.
right, and then the Max product, that's the one that was just recently
Yeah.
launched, I think
It's
in
much more
early
recent. Yeah.
2024. Yeah, and that's really meant to cater to the high end where you'll find, larger property managers who are on something more robust like a Yardi or an MRI or something like that.
Yeah, yeah. No, I mean, so I actually, I went back and looked at it, like, using Wayback Machine and saw like what they were pricing this, their basic tiers for the residential customers. Obviously, there are like, different types of properties that these property managers can manage. So you have like single family residential units, you have multifamily, you have affordable housing, student associations, there are all sorts of things, right? So I'm just I just looked at their like core basic tiers, which is basically for single family residential units, and in 2015 it used to cost like $1 per unit per month, and then in 2016 it was changed to $1.25 per unit per month, and the price kind of stayed there for a few years. So like in 2020, so that's 1.25 was like kind of static between 2016 to 2020 almost. And then in 2021, they increased it to $1.4 per unit per month. And then very recently, actually, sometime in the middle of 2024, they increased it again to $1.49 a month for the basic core tier as for single family residential units.
Yeah, so should we talk about the addressable market here? How
Yeah,
well
yeah.
penetrated is this stuff? Like how do you think about the opportunity there?
Yeah, so yeah, like I think let me give a bit more context here. So I
Hmm.
first looked at AppFolio in February 2024, and first I kind of thought, you know what, like the business is good, it's great, I like the business, but the valuation is probably a bit rich for my taste. And then I kept following the company because I like the business, and then I think I think it's probably a good disclosure to give to listeners. So I ended up buying the stock in October 2024 when the stock kind of dropped a bit, and I actually recently kind of changed my mind again because I think there are some like framework that I had wrong about the business, and I'll kind of explain probably later in the later part of the discussion why I think what sort of framework that I got wrong about the business, and why I think I changed my mind a little bit about certain aspects of the business. I still think this is a good business, but there are just certain aspects that I had to change my mind a little bit, and it's not necessarily a criticism of AppFolio. Like it's probably a lot of the criticism actually goes back to me because there are some stuff that I just got wrong, and one of the reasons I kind of realized that I just got some stuff wrong about the business is there's this so when I posted about like why I'm buying AppFolio, one of the guys from In Practice, William from In Practice, basically just emailed me sharing some of the stuff that they worked on AppFolio, and said, hey, you might find this interesting. And I read their piece. It's pretty well done. I liked it. Like, okay, there's some interesting stuff that I didn't quite think about, or I didn't think deeply about. So I thought that was interesting. And then, but I didn't really, I would say, completely connect the dots. Even after reading their piece, I didn't quite connect the dots, in terms of how I was thinking about the business and how that kind of needed to evolve after reading their work and realizing that there are some stuff that I was not incorporating in my initial research. And so there are definitely some stuff that I will talk about, especially on the payment side of the business, that I did not appreciate how much this business is actually generating revenue from their payments business. So yeah, so
Would you say that this is a payments company that just happens to sell for you management software?
yeah. I always find this kind of characterization
Yeah.
funny, but there's probably some truth to it in this case.
Yeah.
Yeah, so like some of the stuff that they in practice, guys did some good work on the TAM question, and so I really liked their characterization. So I kind of briefly summarize how they kind of thought about it, and I'll add my own thoughts to it as well, as I kind of grill into the TAM question. AppFolio mentions that their TAM is like 51 million units. So let's start with like in units, then we'll talk about the dollar terms and all that. So they talk about like 51 million units, I think. There are some other estimates that it's probably around 46 million. So not a big difference. 46, 51 million, it's okay, like 10% difference in terms of units. And of those, it's a mix of this TAM that's I think more interesting, and I didn't quite think deeply about before reading in practice, in practice work on the TAM question. So if you think about the people who rent, in the US, like I said, like right now, the place I rent now, it's actually owned by an owner who owns only two units. And basically, they're never going to be on AppFolio, right? They're just going to just manage it on Excel, or maybe just, it's 2 units. You don't even probably need an Excel at this point, right? So it's I think it's important to take those single family houses owned by small owners out of the TAM equation. In practice, guys basically estimated it's like 14 million of units. So which means we're looking at like 32 to 37 million, depending on which total initial TAM you take. So let's call it 32 to 37 million units that you have. I think one of the things so this is something that they did not mention. I was just thinking, okay, I get it, like 30 to 37 million units. That's probably my serviceable addressable market, right? So like we go from TAM to SAM. Then the question is how fast this, let's say, serviceable addressable market is growing, right? So then I was thinking, okay, the end market, the units, right? So I was thinking, okay, maybe, so what's the home ownership rate? So obviously, if I become a homeowner in a few years' time, then I'll be not renting. The home ownership rent has some implication for like how fast this end market is going to grow over time. And I found some interesting data when I was kind of looking into it. So just to give you some numbers. So right now, as of Q3 of 2024, the home ownership rate in the US is 65.6%. And it actually peaked in Q2 of 2004 at 69.2%. So it's kind of in a decline, obviously, after the global financial crisis. So right now it's 65.6. So it used to be 69.2 in 2004. And what kind of surprised me a little bit, the homeownership rate was actually 65.7% in Q3 of 1980. So over 45 years, the homeownership rate hasn't quite changed in the US, which for me was a bit of a surprise that that's how long it's been kind of stuck. I don't know to what extent. So I also looked at the data, what's the new home construction in the US, and it peaked in 1972. It was like 2.4 million in 1972 in terms of new home construction. Right now it's like 1.4. So 1.4, 1.5 is like almost from the peak to now, it's like a 1 million difference. So I think it obviously there's like a lot of concerns about housing market. Probably if we start talking about housing market, we can just spend the next hour or so just talking about it. So just to give you some idea and context about the static nature of homeownership market. So it feels like it seems kind of fair to assume the end market units for renters are probably going to grow at, let's say, at least at population level growth, if not slightly faster.
Yeah, I think
which is I'm speaking about for 2 minutes to basically say the unit growth is going to be like 1 to 2%.
Yeah, and
go ahead.
think I was thinking about this a little bit. I think it would be helpful to understand of that addressable market, how much falls into the buckets of managers who have between whatever it is 1 and 3,000 units, 3 to 5, and there really just isn't a lot of good data out there.
So one data that I
Yeah.
saw, let me just give you some numbers here. So top 50 multifamily have like 4 million units, which roughly, if you just average it, obviously, I'm pretty sure there's a power law here
Yeah. Is
maybe.
that owned and managed though? Because I found like the NMHC thing, the top 50.
Yeah.
And I tried to like cross-check some of that data with stuff that was online, and it seemed like in that, but they may have like a different, you may be referencing a different
Okay. Okay.
data set, but
What
it
number
looked
did
like,
you come across?
well, I was just looking at the NH, are you looking at the NMHC, the top 50 list? Is that the one that you're
Uh,
referencing?
I'm not
The,
sure. I don't
okay.
remember.
Right, but I think those were just owned units, and it wouldn't
Okay.
have included the units that they
Managed.
manage on
I
behalf
see.
of others. But
Okay.
I spoke to our Yardi executive
Hmm.
a few days ago, and asked him, and his general impression, again, you've got to put like pretty wide error bars around this because
Sure.
there's just not a lot of good disclosure. But he
Yeah.
thought like in the sub 1,000 unit part of the market, um, I think he thought that there was anywhere between 7 to 10 million units. And then when you go from 1 to 3, 3 to 5, and then 5 to 10, like in
Hmm.
each of those buckets, there's somewhere between 3 to 5 million. And then once you get to like 10,000 and above units, he estimated maybe about 8 million at that top end. AppFolio now, I think they've got what, 8.5 million
Yeah.
units, something
Eight and a
around there.
half.
And
Yeah.
so if we take the TAM that you put out there, like the low 30 million type of unit, maybe they've got a quarter
Yeah. Yeah.
of the total
Yeah.
market, but 80% of AppFolio's units fall in the sub 1,500 unit bucket. And so
Yeah.
within the low end of the market, I think
Yeah.
it's probably fair to say that AppFolio is like pretty dominant. Like they may even
Yep.
have, I don't know, like 60, I'm just kind of guessing, but
Could be.
certainly more than 50% share, I would imagine,
I think
at the
so.
low end.
Yeah, I don't
Yeah.
have a pushback against that. I think that those kind of numbers rings true to me as well. When I contextualize the TAM units and like AppFolios, already the number of units that they have on their kind of company. So yeah,
Yeah, and
more
I
than
think,
50% rings true.
the share data just in general, it's very hard because like AppFolio is the only publicly traded company, right?
Yeah, yeah, yeah.
All the other
Yep,
players are
yep.
private, so we don't really get current unit counts.
No.
But also, like even when RealPage was public, like
Oh my God. Yeah.
RealPage and AppFolio, they both disclose units under management for their
Yeah.
customers, but how they count customers differs.
Very different. Yeah.
Yeah, so AppFolio would only count you as a customer if
Yeah.
you used
So
it
that's
before,
that's
but
there are like
RealPage would count you as a customer if you used any of their modular
module.
products.
Yeah.
And so if you're trying to build the market from the ground up, you're going to end up double counting, and so you can't
Yep.
do it that way either. But anyway,
Yeah.
it's all to say it's all kind of murky, and you have to sort of take all these numbers with a grain of salt, I
Yep.
think.
No.
Yeah.
I absolutely agree. I was actually initially fooled by it. So I assumed a real page has 20 million units, right? So they must be like 2x, more than 2x app folios. But yeah, like, once you kind of adjust for those, like, like more apple to apple, it seems like they're kind of similar in size at this point. Like not a material difference, right? Maybe, real page is still slightly larger, but it's not like 2x
Yeah,
when you kind of adjust it
it's
apple to
really hard
apple.
to know. Yeah,
Yeah.
because yeah, I guess with RealPage, if you wanted an apples to apples comparison, you'd want to know how many of their customers, how many of the units are on one site, or like now building them or something like that.
Right,
But they don't
right.
disclose that. So
Yeah,
yeah,
exactly. So yeah, like, so basically what I was thinking is, okay, I have like the unit numbers is like, yeah, maybe like 32, 35 million units. And I was thinking, okay, the units is probably going to grow at like 1 to 2% CAGR. And obviously if you just as a unit, then you have to take it like, more dollar terms. So the rent, right? The rent is basically,
Mhm.
right now it's like $1,500 roughly speaking in the US.
Yeah.
The average rent in the US, $1,500 per month. And my guess is that's probably gonna grow at like, maybe at, let's say 2-3% inflation plus, right? Inflation or inflation plus. Hard to see that it's gonna grow below inflation for, let's say, 10-20 years. That seems unlikely given the constructions and all that I just talked about. So yeah, like, and then also, so that's like, unit and rent, but also the market that we are actually or care about is basically the software and services. So the services business, may itself can grow another 2-3% along with the broader kind of end market itself. So I was like, okay, maybe the serviceable addressable market can grow at can itself grow at let's say 6-8%, somewhere around that. And it just to put it dollar terms, like right now AppFolio generates $80 ARPU, average revenue per unit per year. So if you assume that this is like the fully optimized ARPU, there's no growth available. So you guys basically just multiply 80 multiplied by the current rent, which is like $1,500, let's say a dollar, or like $18,000 per year, multiplied by let's say 35 million units. That gives you like $2.5 billion of TAM, which probably is very low, which is probably a pretty good indication that the current ARPU is not fully saturated. You still have more growth available on that ARPU. So yeah, if you assume, let's say it's actually double that, let's say $200 ARPU is possible. That's so you double that TAM from $2.5 billion to $5 billion, and that itself can grow at let's say 5-8%. So over the course of
where are you getting that $2.5 billion?
So if you multiply AppFolio's current ARPU, average revenue per unit, which is
current ARPU,
which is $80, right?
Yeah, got it.
You multiply that by serviceable addressable market, which is 32 million, let's say, right?
Yeah.
So that gives you $2.5 billion, right?
Mm-hmm.
So that's what I was saying. But if you assume actually it's not ARPU is the serviceable addressable ARPU is not actually 80 but 200, let's say, over time, then it's 150, let's say, then it's 5 billion or something like that. But that obviously the TAM itself is growing over time, right? So if it grows at 7%, then in 10 years, this TAM is going to be $10 billion TAM. So that's how I kind of thought about it in terms of the serviceable addressable market opportunity for AppFolio. But it's not like you were kind of alluding before. It's not just software. It's payments is basically a huge chunk of the business, something that I really underestimated when I initially looked at business. And actually, when I was actually preparing, I was actually just going back and looking at the company again, and just probably paid much closer attention this time before conversing with you on the company. And then it really kind of I kind of woke up and realized, oh, this is payments. I didn't do the math before, because they don't really spell it out on their 10K.
Yeah.
Right? So unless and until you actually do the math, you don't realize that payment is such a huge part of the business. And this is where I have to give the In Practice guys a lot of credit, because they did the math. And even after I read it the first time, I still didn't kind of wake up to realize, if I assume their assumptions are correct, then I look at the revenue and I look at the payment revenue, oh my God, this is a significant part of the revenue. And in fact, their value plus, so they basically segments their revenue in two ways. Core solutions, which is the software that we first basically initially talked about, the core, the plus, the max tier, product. That's basically core solutions, right? But that's only 25% of their revenue today. The three quarter of the revenue basically comes from the value plus, right?
Yeah, and pretty much almost all of the value plus comes from payments. I think.
So I did not appreciate that. I did not appreciate. So when I looked at the business, okay, what is Value Plus? What are the services in Value Plus? So I was like, okay, they have payments, you have screening, if you are a new tenant, you are applying for for a unit. So the property manager or the owner wants to make sure that you don't have eviction history, your credit is fine. So they need to do screening, right? And then you have insurance, the renters can buy the renter's insurance. Then you have maintenance, if something's broken at your home, you can just click a button and basically request for a service at your home, right? So I thought, okay, there's a bunch of stuff that the Value Plus stuff has, but I did not actually just take a moment and realize, okay, there's a way to do the math here to realize how much of that value plus is basically coming from payments and how much is the rest of the stuff. I did not spend enough time initially thinking about that kind of differentiation. But after reading the app in practice PS, I realized, and I did the math myself and did some, tweak some assumptions here and there and realized, well, no matter how much you change those assumptions, I think the fact is clear. A super majority of the revenue comes from the payments. All the screening, the insurance, the maintenance stuff, those are really probably almost not quite like a drop in the bucket, but almost like that, right? So
I think that's fair. I mean, I think maybe 80% of just the value added part is probably payments, and if value added is 3/4 of revenue, I mean that implies that
60%,
60% of the business is essentially payments.
So I do think that has pretty important implications in terms of the growth opportunities going forward.
Exactly.
Right?
Yeah.
But before that, do you mind just kind of double down on kind of just clarify, why do you think, because the company doesn't disclose it, but we both are kind of confident now that they generate a significant amount of revenue from the payments. Do you want to explain, or I can do that as well? Go ahead.
Okay, I'll try to unpack it
Sure.
a little bit. So so in August 2023, AppFolio initiated fees for ACH payments.
Yeah.
And the way it works is like, so if a tenant makes a payment for their rent on the portal, they're going to pay like $2.49 for and that goes to AppFolio. Alternatively, the property manager can pay, if the property manager makes the payment, pays the fees themselves, they're only paying $1. So in other words, the amount of revenue that AppFolio gets per rental payment, it's going to vary somewhere between $1 and $2.49. It's somewhere in between. We don't know the exact mix of what that is, but let's just round and call it like $2.
Yeah. I think that's fair because
unit.
my suspicion is most property managers or owners are just passing that cost to the tenants. That's my guess, but I can't be really certain about it.
Yeah.
$2 feels reasonable to me.
Feels about right. Yeah.
Yeah.
But then also there are some people, I guess, who pay their rent with credit card.
Yeah.
That's a very small percentage, I would imagine. But AppFolio also clears 3.5% on
So
on those
it
payments.
used to be 3.49%. I think they actually decreases to 2.99% in 2024. So it used to be 3.49. Now it's 2.99. But still, that's where when I kind of did the math and realized, oh my God. First, when I realized, okay, just 5%, not a big deal, right? But when you do the math, okay, 5%.
Right, because 3.5 on that, it's such a it's a big
such
number.
a huge number.
I don't know why people. But anyway, but but I think it's probably fair to say, whether or not you're talking about ACH, credit card, or debit card, that's a fully penetrated product. I mean, I would wager that probably 90% or more
90%,
of the units pay their rent electronically rather than through checks, right?
Yeah.
So that's kind of like at a high level the payments piece, and I guess when you can kind of math it out, but when you do, I mean, it's pretty easy to arrive at the conclusion that payments is like a key. It is probably like the majority of the revenue of the value-added services.
So I kind of did the math, and it's kind of fresh in my memory, and it's actually in front of me as well. So I'll just put some numbers for anyone who's listening to actually understand the significance of the payments revenue. So like David said, ACH was basically introduced in August of 2023. In 2023, that ACH fee is basically came to AppFolio for only 5 months, right? So they had 8 million, let's say 8.2 million units under management in 2023 and 7.3 million in 2022. So you took the average of those two numbers, multiplied by 2, because we are assuming, let's say, $2 per unit, or not per unit, but every time you're paying the rent, you're paying the $2 roughly speaking. If you're paying at 249. If the landlord is paying or the property manager is paying, they're paying like $1. We're just going for a round number to $2.
Yeah, like
And
24 times 8 million. Yeah.
yeah, and like if you assume 75% of the total rent is basically going via ACH, and it was only available for 5 months in 2023, that roughly gives you like $58 million in 2023, the payment revenue just from ACH, right? That's ACH. Now the credit card, and this is where I basically kind of woke up realizing, okay, wow, even though it sounded low, like 5% of the rent is coming from a credit card, in terms of revenue, it can be quite significant. So credit card, like, if you assume 5% of the rent is coming from credit card, and you assume that you're getting paid 3.49% on that amount, that basically leads to $219 million of revenue. And for debit card, they basically get like a fixed amount dollar, like $9.99. It's not like a percentage number for each time you're paying rent. And let's assume that's like 10% of the renters who are paying basically via their debit card. But that's like, so that the math comes down to like $100 million. So if you add those like ACH, credit card, debit card, it comes down to like $375 million of payments revenue. And the value plus services was like $454 million in 2023. So we're talking about 83% of value plus services basically came from payments, and basically the rest, $80 million, was the other value plus services, which is basically screening, insurance, like maintenance and stuff like that. So
Yeah,
it's
and they're
quite significant.
Yeah, and they're just number one is like, again, you got to take this with a grain of salt because we don't know the exact mix of like credit
Right.
and ACH and debit, but I think it's fair to assume that the bulk of it, like 80% plus, is probably ACH. I
Yeah.
don't think it's too common for people to pay their rent with credit card. And the
Yeah.
other thing to just recognize is that there are different margin structures to each of these payment streams. So like
Absolutely.
ACH, it's almost pure margin.
Yep.
Because AppFolio is paying maybe cents on the back end and
Yeah.
you're getting $2.50 of fees, whereas with credit and debit, they're paying interchange, right? So
Yep.
even though credit may be more revenue than ACH,
Revenue, yeah.
it's
Yeah.
in terms of gross profit, it's
Lower. Yeah. No, I mean, totally agreed that there's definitely different margin profiles on those, three buckets. But still, I just want to highlight
Yeah.
that, and the reason it's super important because it has pretty profound implications for the kind of growth you're assuming. Just to, again, to give more context, AppFolio has been kind of on a tier for pretty much the entire time they are in their public company. So like, they grew like, 31% in 2022, 1.3% in 2022, 31.5% in 2023. They're probably going to grow like another, like, 25, 27%, 27%, I think, in 2024. So pretty
and that's
high.
essentially all organic. All this growth,
All
essentially.
organic,
Yeah,
no
yeah.
acquisition, nothing.
Yeah.
Like their last major so they just did acquisition like last quarter, I think, and before that they did like in 2019 or something like that. So
Right, yeah. So
it's
they've done
entirely
like maybe
organic.
150 million or so of acquisitions over their life, but it's not. But essentially, when we're talking about growth, you should just consider that effectively all organic. Yeah,
All organic, right?
yeah,
So as David was saying, that okay, the payment product is like almost full penetration has been done, right? So there is no like real lift in terms of like increasing adoption, and I would argue there's not really a lot of lift available for like it's hard to imagine that they can increase that to 2.49 amount to like, let's say, more 3 or 4 or 5, because, and maybe it's something we can probably talk about. So Yardi, for example, used to charge something for their ACH, but they stopped doing it. So they made it zero, right? And they
Yeah.
kind of did a press release and all that. Like renters are so happy. So there's definitely, and we know that a lot of a lot of property managers were not super happy when AppFolio imposed that 249 charge to their renters. So it's hard to imagine for me that they can actually pull the lever on those numbers, right? And obviously, like, the credit card, debit card doesn't feel like, and they did decrease the credit card related fees. So it doesn't feel like there's much lever there as well. So payments, basically, if you just do the math that I kind of explained and do it like for the past years, you realize a lot of the Value Plus services growth was basically coming from like payments. And if you think, okay, payments is like kind of tapped out, then you need these other Value Plus services to come in and basically contribute, right? So basically, I think the framework that I had in mind, and I think the thing that I'm kind of updating in my own mind was I kind of assumed, okay, all this stuff are contributing to the growth, like the screening, the insurance, the maintenance, the payments, they're all contributing to the growth, right? And obviously, like since there's a lot of adoption left for those other Value Plus services product, like over time, it will just keep increasing, and revenue available for on a per unit basis will keep keep pace over time with revenue growth over time. And even though I did not assume that they are going to grow at 25-30% rate, but I thought high teen would be manageable. Now if you assume that okay, payment revenue is tapped out more or less, right, that growth is not going to do a lot of lever for you, then you need this other stuff and the numbers get big, right? So if you assume the Value Plus services, the screening, the insurance stuff, most of this stuff I would say have been available on AppFolio for forever, right? So it's not like a new product that they did not have and they are just launching. No, they had it for forever. So they are launching some new stuff for like Lisa AI, like using signals and stuff like that. So there are some new stuff, but if you want to assume that AppFolio will be able to grow at like mid to high teen, 5, 6, 7, 8 years from down the line, you really need to assume that these other Value Plus services are going to grow from let's say roughly $80-100 million revenue bucket to like $1 billion revenue bucket.
Yeah.
Right. So that is the bet. The core solutions, yes. Do they have pricing power? Maybe they do. Like the core solutions product. So they now have $1.49, $3.22 per unit per month, or $5 per unit per month. Can they increase? Maybe they can. Maybe they can a little bit, over time. But it's hard to, I looked at some of the competing products as well. I don't think there's a massive, wage left, in terms of okay, they can go from 1.49 to $5 for the core product, in 2030.
Yeah, it would be less about, to break this down, I guess, a little bit more.
Yeah.
So revenue, it's a function of units times ARPU. ARPU, you can break that down further into pricing and also the amount of extra services that are sold into the existing customer base.
Right.
So when it comes to pricing, I mean, if you were to look at just their core revenue per unit since 2015, its own core revenue per unit, that's probably grown by about 2% a year. And a lot of that is a mix shift. And so I think it's fair to imply that there's not a lot of pricing.
Yeah.
In there, this is the kind of product, it is sticky and it is very
Very
hard to
sticky.
move, but there are a lot of competitors nonetheless. So
Yeah.
it's not like, a CoStar. A CoStar can kind of jack prices up 5 to 7% reliably because
Yeah.
they're a monopoly. They're the only player in the market. That's not true here.
I
right?
want to add something, to this discussion, some information and data here. AppFolio has been an amazing business. So before IPO, the IPO did I think 2014, 2015, somewhere around that. They just raised $30 million, and during IPO they raised $70 million. So over the entire life, they raised just $100 million to build almost a $9 billion enterprise value business from 100 million to pretty amazing. One of their competitors, Entrada, that I mentioned, they raised, I had to double check because I almost fell out of my chair. They raised a $500 million round into 2021 in one round. $500 million, right? So there are a lot of funds available for, and they have ERD, which obviously has been around since 1980. I'm pretty sure funding is not an issue for them. So and they're very profitable, right? So if they try to exercise pricing, I think they will get a lot of response from the market, right?
Yeah, I think that's right. Yeah, so it's a sticky product, but it's still very competitive, and so that leaves essentially, either upselling the existing base into higher price tiers or cross-selling them more services. Yeah, so it's possible. What is the blended core revenue per unit? It's what, $1.70, something like that.
80.
$1.80. Okay.
Yeah.
So maybe there's some room there as more customers adopt the Plus and the Max.
For sure.
Right.
For sure.
But then you're also kind of betting on, but then, yeah, the pushback here is like they have all these other value added services outside of payments that don't seem to have gotten a lot of traction at this point, even though they've been
Yeah.
around for a while. And
Mm-hmm.
then they have like all these new kind of AI services out there, which which are, maybe a bit speculative at this point,
Yeah.
but even if you make some pretty bullish projections about the adoption of of these AI services and some upselling to higher price tiers, it still feels like the valuation here prices a lot of that in, at least
Yeah. Yeah,
at
yeah,
least
yeah. I think
from my
for me
perspective.
that was the most clarifying thing. So like when it comes to valuation, I think more in terms of the question that valuation is asking me in terms of in terms of what I need to assume and what I need to believe,
Hmm.
instead of like thinking of this trading as like 50 times 60 times, so it's expensive cheap, like there's not enough context for me to realize whether 50x is cheap or expensive just by looking at the multiple, right?
Yeah.
But when I think about like, okay, what are the like what I need to assume, what I need to believe for this valuation to make sense, and whether it can happen or not, that's like the next question, right? So the first question is, okay, what I need to assume, what I need to believe. And what's really clarifying to me was I need to believe that the value plus other value plus, not the payments, not just the payments, other value plus services need to be a significant part of the revenue, let's say by
Hmm.
the next 5 to 7 years. That
Yeah.
is the bet. Like if you are a shareholder of AppFolio today, and obviously let's say you are looking for somewhere around, let's say 10 12% IRR, that's the bet you are making. That's a core bet. And there's also like some other stuff. Obviously you have to believe that you have to, like right now they have like 8.5 million units under management. You have to believe that they can go to 15, let's say, by
Right.
next 6 7 years.
Right.
So they're like, obviously there are like, like I said, there are several questions that evaluation asks you, right? There are
That's
some
right. Yeah.
questions you may be more comfortable about. There are some questions you may be less comfortable about. uh, so that's how I kind of think about it. I was like, when I was looking at the business, let's say earlier, let's say around October timeframe, I was like, okay, I was kind of I was comfortable with assuming like, yeah, they can get to like, let's say 14 15 million units.
Hmm.
What really kind of spooked me a little bit was this bet on value plus services. Can they do
Right.
it? Maybe they can. Am I comfortable making
Yeah.
that bet? Right? That's where I basically get a
Yeah. So
pause.
let me, so, my spreadsheets are laughably simple compared to yours.
Yeah,
But I
simplicity
just
is
kind
good.
of
Is
I
the way
was
to
just
go.
kind of like, but let me just throw some numbers out there,
Sure.
which is I think we're
Yeah.
both kind of assuming kind of a low single digit type unit growth over the next decade or so. So in 10 years, let's say they're at 15 million units, and
10?
let's say,
10?
yeah.
Then math is not going to work. Make it shorter.
Yeah, so again, this
Okay. Yeah. No.
just
No. Let's
it's
go
just
with it.
playing with numbers. It's
Let's
just
go with
I'm
it.
just playing
Yeah.
with numbers here,
Yeah. Yeah.
right?
Sure. Go ahead. Yeah.
So
Fine.
right now, like on a trailing 12 months basis, they're doing about $90 of revenue per unit. And
Okay.
then in year 10, let's say they're doing 180. So that gets to about 2.7
Oh, now
billion.
the math is going to work.
So now that's we're at
Yeah.
2.7 billion of revenue, and let's give them like 30% EBITDA
So
margins.
you see,
And
David. No, let's take a pause because I think it's worth making a point, because I think what you are doing is closer. Although I have a more complex model, but essentially it's closer to what I did before
mhm.
understanding this kind of payment nuances, right?
Yeah, yeah, but
So when you were saying 90 to 180, right?
right.
Like so the what I'm really trying to highlight is like of that 180, you are betting like a massive amount
Yeah,
of that
so let me
180.
just finish this
Yeah,
point though. Okay,
sure.
so
Yeah.
so let's assume that we give them a healthy kind of 30% margin. They're kind of like
Yep.
a
Already
top,
20%. Yeah.
yeah, and put a 30, and then, put a 30 multiple on whatever after-tax free cash flow that
Sure.
amounts to. And add up the cash, and I get to about 8%, right? But the key driver here, it's going to be revenue per unit. So how do you get from 90 to 180, right? To
Yeah.
even get to that 8%? That's kind of the question.
Yeah.
Now, like you might say, well, okay, maybe the average, maybe like the core revenue per per unit, maybe that gets them another. $1.50, right, per month
Yeah. Yeah.
times 12. So that's another $18. And then
18.
like these
Yeah.
AI services, even if you assume like they're, $2 per unit and they're like 100% adopted, that's like,
24.
$24, right? So
Yeah.
those two together will get you another $40 off of a $90 base. So it's just like, how do you bridge that gap? It's very, I think it requires a lot of bullish thinking, especially considering that, like, yeah, outside of payments, they don't appear to have gotten much
Okay,
option
okay.
for this other stuff.
Let
But
me try to play a devil's advocate. So
uh,
I don't have a lot of pushback against your, let's say, the framework that you just explained. But what if they lever up? So their competitor, Real Page,
mhm.
is levered like 7 times, 8 times, right? So I think off the top of my head, I don't think they're levered at all. I think it's probably net cash, if I'm not mistaken. You have to double check, but it's not leverage. It's like even if there is something, it's like nothing,
Yeah,
almost negligible. So maybe the math can work for shareholders if if they just lever it up by like 3 4x. Like it's a pretty sticky business like we were talking about. Their churn is really, I've read, like they don't disclose it, but the churn I read is basically
low single
3%,
digits.
low
Yeah.
single digits. So it's like a
Hmm.
20-year lifetime, right, value in terms of duration. So seems like a perfect business where you can actually lever up a little bit, right? So if you just lever it like 3 4x, even maybe the ARPU math is not going to work out, but for
Yeah.
shareholders. And the important thing is to remember, this is not a typical company where the board is inept, like or the
Right.
massive conflict of interest. Like no, the board is actually, it's a board-run company. Riz Duka, which is basically owns like a significant part, 20 25% of the company, and basically 40+% voting power. And when you add all the other IGSP people or former IGSP people, it's like they are the majority. They have the majority voting power. They don't strike me as people who don't know how to make the stock work if it's
Right.
required, right? So I think that's my best guess is like if 5 6 7 8 years down the line, if we look back and like, oh, actually AppFolio did pretty well.
Yeah. Yeah.
They were not dead. The stock was not dead for 5 6 7 8 10 years, right? And let's say my guess is I don't expect that they will do like, let's say, 180 $200 ARPU. I think that's probably unlikely at this point. My understanding,
Yeah.
who knows? It's probably a 2 percentile event, top 2 percentile event if it happens, right? It's very hard to underwrite that when it's let's say very very like the
Yeah.
very
And
right tail scenario.
just to put some context around there, I think when RealPage was still a public company, I think they were saying like their top 50 customers were doing like 250 or 230 or something like that of revenue per unit. And I
Yeah.
think AppFolio, like see, like AppFolio, they're doing like 90 per unit now, but there's a pretty wide spread. So like the bottom 100 customers are only delivering 30, but the top
Mm.
100 are doing like 120. And that was in 2023 before the payment. So if you want to add, maybe another $20, maybe it's more like 140
Mm.
for their top 100 customers. So like I guess in theory it's possible, but I guess a lot of whether or not they can um, expand that ARPU is I think predicated on whether they can successfully climb up market. And I think
Yeah,
there are some like unique challenges there. But
for
before
sure.
getting into that, it might make sense to just like kind of talk about the competitive landscape, like who are
Yeah,
the
yeah,
major
yeah, yeah,
players and where
yeah.
they kind of where they play. So I guess like the big dog in this space
Yeah,
is Yardi, right? So
yeah.
they've been around since the 80s, and they're kind of considered the default option for
Yep.
large property managers. And they've got a mix of like commercial properties as well as residential. The core way they've historically differentiated themselves is by having like a very robust accounting product. And so that's kind
Yeah.
of what you hear. If that's your concern, accounting, then you kind of default to Yardi. Besides Yardi, there's Yardi's kind of at the high end. Then you have RealPage.
Yeah.
RealPage, it's I guess you could accurately describe that as a roll up. They've done just a ton of acquisitions. I think in the decade before they were acquired, they did maybe 2.5 billion of acquisitions, and they've acquired everything. It's like solutions related to like affordable
Yeah.
housing, senior living, yield
Right.
management.
Yeah, it's a hodgepodge of
utility
everything. Yeah.
management. They were even like trying to get into like some smart home stuff towards the end. And a lot of these acquisitions like overlap with each other as well.
Yeah.
And they have like different kind of brand. So like their core brand for the higher end of the market is one site, but then they also recently acquired a smaller competitor called Buildium, which plays at the very low end of the market.
Yep. Yep.
So they're kind of like a collection of different solutions, very loosely integrated, I would say. It's not, yeah. And so that's RealPage. And then you have Entrata. So Entrata actually started off in payments and as a portal and as a web portal. And they used to have like a good relationship with Yardi, where Yardi would serve as the core accounting platform. And then Entrata would integrate into Yardi. And they had a close relationship for a while. But then they started trespassing into each other's space. They sued each other. And I don't know, I don't know where that relationship stands now, but I do know that Entrata has a pretty good reputation in the market. They're kind of built on modern tech, and they seem to be doing okay. In contrast to somebody like MRI Software. So MRI Software, they were their origins date back to like 1971. So they're like even older than Yardi. Yeah, and I think they were acquired by I think they were acquired by Intuit in the early 2000s. Then they were passed around to various private equity firms. Their R&D was gutted, and they lost a ton of share in the residential space. And I think they have a pretty good commercial presence, but at least in residential, they're not really considered a player anymore. I think maybe their one differentiating aspect is that they're considered like one of the more open solutions. They integrate with a lot of different software pieces, but I don't get the sense that AppFolio or Yardi are losing sleep over MRI. It seems like kind of an antiquated product. And so I guess like one of the challenges with moving up market. So AppFolio, one of the reasons why their product works so well at the low end is because it's really easy to use. People call it the Apple of property management software, the Tesla or whatever, because they're essentially taking, I mean, I guess one analogy you can use is that they're taking like the Nokia flip phone and the calculator and the camera, and they're replacing that with an iPhone, right? It's just this very elegant, organically built solution. Right. And that plays really well at the low end of the market.
SMBs,
where you're not necessarily dealing with the most sophisticated managers. Right. At the high end of the market, if you want to cater to, a large property manager like Graystar, for example, though, these larger players, they tend to have like a mix of different properties. They'll have student housing, they'll have affordable housing, and each of these domains have their own like idiosyncrasies. Like when it comes to affordable housing, there's a lot of compliance and documentation that you need to recertify tenants to make sure that they meet the income thresholds and net worth thresholds. For student housing, there are like bulk move-ins and move-outs, and they live there for 9 months out of the year instead of 12. And there's these different things that you need to consider. And then the other thing is at the high end, managers, they tend to integrate, they tend to care about integrations more. So they don't just want this one solution. They want it to connect to all these other pieces of software that they're using. And they also want more flexibility as far as like, changing the column names and fields and that kind of stuff. Right. And AppFolio historically has not been able to do that, right? So their first step in that direction was in, I think, 2022 when they announced Stack. Yeah. And so Stack, I think you can sort of think of as like the App Store, right? It's sort of like they're like these there are these third-party prop tech that
they're all integrated with AppFolio's kind of system.
Exactly. Yeah. But they're one-way APIs, right? Yeah. And so it doesn't exactly appeal to the most sophisticated customers for that reason. It's a step in the right direction, though. Right. And then in 2023, 2024, with the release of Max, that's kind of like when they really
now they're serious about upmarket, right?
Now they're serious about and there's two-way APIs there now, and they've become more of an open platform. But it's still very early days here. It's not even a year since that was launched, and so we don't know. We don't know like how well received that product is going to be. But assuming that they are able to gain some traction there, it's a big part of the ARPU story, because it will kind of push their existing customers to migrate from lower tiers to higher tiers, but also higher end customers tend to adopt more value added
Right.
services. So
Yes.
something like yield management. So this would be like a product that can optimize the rental rates that you charge. So like a small property manager with like 50 units, they're not going to care about that as like a high. So the way I would think about it is like at the low end, the property managers, I think they're more concerned with like efficiency, saving time. At the high end, the managers start to be more dialed into like optimization, like lead
Right.
generation, and
Yeah.
can we push occupancy from like 92% to 94% and
Yeah.
that kind of stuff.
And percentage stuff matters when you're
It
managing
matters
like
a lot. Yes.
thousands, tens of thousands of like units, right?
Right.
Those things matters
Exactly.
a hell lot more than when you're managing like 2 or 5 units or like 50 units even.
Yeah, yeah. And so I think, like at the low end of the market, AppFolio, they're like kind of the perfect solution, and they really do differentiate there
Yep. Yep.
because I don't think anyone else really comes close to when it comes to the things that matter to that particular customer base, which is
Right.
like ease of use and that kind of stuff. At the high end, the different that stuff matters less, I would say,
Yeah.
than functionality and yeah, like I don't know. Yeah, I don't get the sense that at the high end. Well, you get my point.
Yeah, yeah. It's like this podcast. We were supposed to like record for only 45 minutes. Like we are way
Oh
running
man,
over
we're way
above
running it.
that, right? So I think I get the point, and I think anyone who's listening to it also get the point. So we can probably just keep it just keep it there.
Yeah. Sure. Yeah. It was a winding road, but I think this was a good one.